What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is September 11th of 2021. Well, folks, I hope you are having a fantastic day wherever you are, and in today's video, I want to dive into the topic about the current state of the market as we had the recent sell-off in crypto markets. Many people are curious about whether or not we're shaping up, as people were proposing back in May, for a bear market, as this is generally a lower high range for Bitcoin. So I want to go ahead and dive into the signs of why I personally don't feel that's the case from what I can see, but I want to give a broad stroke across the market and try to be as non-biased as I can. So without further ado, guys, let's go ahead and dive into the conversation. I want to start here by taking a look here at Bitcoin. Now, we're not going to spend too much time diving into individual cryptos here, only to prove some key points here. Right, so first off here, in the sense of Bitcoin, we got past all the major points of resistance from the previous correction. We've made nice leaps and bounds here in a very short window of time, really just a little over a month and a half here. Right, so we got here again this major move of price action. Again, just to put in percentage terms, even after the correction, we're still up here around roughly 51%. A really solid recovery for Bitcoin's price. And until we really close anywhere significantly below this new potential support range, or generally where we had the lows here from the recent correction, I'm not too concerned. And I understand the daily candle formation does not look incredibly good, but again, things can change in a very short period of time. And I really care about what's going to happen. I know price is probably going to come down here, but what's going to happen when it gets there, right? That's what I'm looking for here as a trader. Now, one thing I want to talk about here as we go through the charts is I want to talk about the difference between Ethereum and Bitcoin, and broadly speaking, the altcoin space versus Bitcoin. Because if we do the same exact thing here using the date and time range tool from bottom to top, we can see here that Ethereum is not only up nearly 87% here in just a matter of really, again, a little over a month and a half, but outside of that as well, we actually had the opportunity here where price nearly revisited the all-time highs for Ethereum. Right? So not only has Ethereum been generally outpacing Bitcoin throughout this entire cycle, doing phenomenally well, it's also still holding up against Bitcoin and continuing to outpace it. And if you need to see that, we can take a look at ETH BTC, right? Any kind of pair here, and we can see that we're right back up to the general range here where we were back here in May, right? We're still setting those higher lows and higher highs once again, looking like we want to continue that trend. And this leads me to taking a look at the two total market weight valuations, which is total in this case, which is going to be the entire cryptocurrency valuation metric, and then also total 2. Take a look at total, right? So even after this blatant, scary correction that everyone's very riled up about, feels that is a clear sign that we are in a bear market in this case, that momentum is stagnating. Take a look here at the monthly chart for total market cap. You know, just a little while ago, just a couple weeks back, we were at 2.4 trillion. The height here for the last previous high in May was 2.5 trillion. Now, feel free if you guys want to use 2017 or early 2018 as an example to go off of. Was the high range for that lower high that came in that close to the previous one? Because when I'm looking at total market cap here on January 2018, I see a high here for the month of January at 761 billion, whereas the same kind of distance and time frame, or maybe even one closer, is really a fraction of that. You're talking about hundreds of billions of dollars of market cap being swiped off, and back then, that was a big chunk of market cap. Nowadays, we're really not seeing that. We're seeing a much more similar high range here, even after a pretty severe correction. We're still holding at around $2 trillion, just again a couple billion dollars, a couple hundred billion from the previous all-time high. Right? On a percentage basis, that's really negligible. And what's even more important, just to summarize how much good price action we've been having as of recent, we're only down 1.2% for the month. Over the last 11 days, we basically just neutralized some upward price action, which is pretty common in crypto corrections. And this is going to lead me into a point that, again, I emphasized in one of our previous videos, which kind of summarized the roadmap in this case for crypto and what we should expect reasonably. Again, a lot of people are saying that this cycle is going to end in 2021. We're going big to 100K. It's set in. It's guaranteed. It's going to happen this year in 2021. It's the year. I got to be honest with you guys. I don't think it's topping out in 2021. And I think at earliest in this case, we are going to see something in late 2022. I want to be very clear about that, guys, because what I think we're seeing here, even though there is definitely some discrepancies we'll talk about later on in the market, at the same time, what we're seeing here is a maturing here and a lengthening of cycles, right, for cryptocurrency assets, where we're starting to sway across this midway line here that is definitely going to be picking up some momentum here, I think, over the next coming months as we are in the full swing of the bull market. We've gotten past the previous all-time highs, right? I think that we can get back up above this line and continue the trend. But we're expecting, according to expanding cycles, that this is going to take us in to November, December of 2022 at the earliest, right? And I have to say, looking at how the chart has been playing out, this swinging back and forth, I think that's a very reasonable way to play it. And that's calling for a $10 trillion market cap, a 5x from here. I think that's a pretty nice ask in that case. And it's a reasonable amount of time for this new valuation increase as crypto really hits the mainstream and gets institutions on board. Now, the important thing I wanted to note as we were taking a look at the Bitcoin Ethereum chart is the difference between total and total 2. Take a look here at this, guys. Again, this is another chart we had here we focused on back a couple weeks ago. This is generally showcasing the long-term trends and comparisons to the previous cycle here for altcoin market cap, right? Total 2. We're expecting here that things aren't going to carry parabolic, but they're going to be declining in momentum on the logarithmic chart, up towards around 7.5 trillion. This month, we are still up 1.35%. So even after this brutal correction, all right, that I know no one looks forward to, it's not fun, we're generally where we are at the start of the month, 11 days ago. Is it all that disastrous? Is it all that bad? I really don't think so, because I don't know about you guys. I don't know when you got in the market, but I've been averaging since back here in, May when we had the correction at the lows. I've been buying up all the way throughout this cycle. It's hard to be in a position where you're down right now in crypto markets, unless you just got your first entry here at the correction we just had. And history shows us here that it doesn't last very long. But what's the important thing that I want to point out, because I'm rambling at this point, the point I want to bring up is that altcoin market cap is up for the month, whereas Bitcoin market cap is yet again slightly down. And this speaks again to the metric that everyone should be watching, which is dominance. But this to me, and we're going to talk about a lot of things throughout today's video, but this to me is the guarantee in my mind that we are not in a bear market right now. It's altcoin dominance. Altcoin dominance goes up and sets new relative highs or retests previous highs, and then therefore sets new all-time highs or relative highs when markets are in a bull market. And you can see that multiple times here. We had a major run-up, pullback, run-up, pullback, run-up, pullback, run-up, pullback, right? And until you really set in significant lower highs over long-term time frames, and this was over multiple weeks, right, multiple months, going here from January to May of 2018, right? We've had that same kind of time period before setting new highs, and look how close we are. Even during this correction, we're holding up at right under 60% market dominance, right back where we were here in May of 2021. It might be other players who have taken that lead. It might be other cryptocurrencies who are signaling that strength. Maybe with the NFT space, some of those plays have taken up market share. But we can see very, very clearly that the market is sustaining this correction and that altcoins are not showcasing any sign of running for the hills. Trust me, guys, you will see it in altcoins. You will see it in the Ethereum BTC chart before you see it in Bitcoin, right? When we're really going to see that top signal in. And we can see that there are a lot of altcoins. Here's like one, for example, UBT, right? Which ran up here all the way to 9,000 sats, came down here to 6,000 sats, and has gotten a very nice bounce off here off of the channel that it had been stuck in for back over pretty much for the past couple months since back in January. Right? And you're seeing a lot of technical patterns like this. You're seeing it in plays like Omise Go. All right, I'll go ahead and pull up here. Just gonna find it on my sidebar. There we go. OMG, it's actually turning up today, right? You've got runs like this that have been baselining at the same support range, starting yet again to repeat its similar pattern of an expanding channel. Probably gonna test up here towards around 3,000 sats, right? These are the kind of things that we want to look for, guys. There are all types of different opportunities. Now, I want to go ahead and talk about one important market dynamic. Let's take a look at the actual exchange reserves. Now, why is this important? Well, like we've talked about before, Exchange reserves is going to give us a good idea here of how much Bitcoin are actually available on the exchange books for people to buy. And not only that, but also as you have less Bitcoin on exchanges, you generally will have less limit orders on the buying and selling side. This will mean that in this case, as more Bitcoin moves off of exchanges, that it is going to increase volatility. Now, why am I pointing that out? Because of the fact that of the correction that we just saw and the one we saw back in May, we have less liquidity on the spot market, therefore leading prices to be able to move more dramatically. But there's also a reason, and I'm going to tell you guys the kind of reality truth here. As much as there are institutions buying Bitcoin, and that is definitely reducing some of the supply from exchanges, no doubt about it, is playing a role in it, and it's going to continue to play a role. The important thing to know about, as much as people say, oh, this is the institutions FOMOing in, going from 14% Bitcoin on exchanges to 13%, the supply shortage is real. Some of it is not because of institutions, and I would actually argue a big chunk of it is not institutions buying Bitcoin. A lot of it is Bitcoin simply flowing out of the exchanges that are tracked in this metric. Right? And we can see here a lot of them are moving off of Coinbase, right? In this case, 1 million Bitcoin, almost 1/21 of the entire ever existing supply of Bitcoin that there ever will be, basically going from 1 million down to 700,000. So why is there this general decline on exchanges, and not just Coinbase, but a lot of other players? Well, because this doesn't track all the exchanges. And what it's really missing out on are two very popular exchanges that have really started to garner traction, Bybit and FTX. I'm going to tell you guys, I'm not recommending them. I'm just saying very clearly here that there's a lot of traffic coming to these platforms, right, that isn't being tracked. Binance is being tracked, OKX is being tracked, right? Some other ones here are being tracked, some aren't. But you guys know, as I've talked about on the channel, there's a big trend of people going off and leverage trading. They're taking their Bitcoin off spot and they're putting it in the casino. They're putting it in the derivatives, leverage trading, margin trading platforms out there where, again, they're trading on margin. They're borrowing credit. They're borrowing money that isn't theirs, and they inevitably get too greedy and end up losing it all. And that's exactly what we saw. That's why we get these heightened spikes of liquidations at record amounts we had never seen before this cycle, because they become so popular and people are promoting them endlessly. And guys, again, this is a very important thing. You guys can go check these metrics online. They're free for everyone to see. But you can see here, yet again, most people here, and if we step to the long-term time frames, it'll be more neutral. But you can see here that overall, the market's still excessively long on leverage, right? And the more that this happens after corrections, the more people get comfortable with this. There will be days of awakening that really, really set people in their place and realize, oh, wow, that 2x, 3x, 5x leverage long that I thought I was safe in, I'm really not safe in. And there is liquidation risk, and I could be losing it all. And unfortunately, many people find that too late. So this is an important thing, not just for people who are potentially leverage trading, but it is an important thing for those of you who are also wanting to buy Bitcoin and hold long term. And I do want to advise in this case, or recommend as an option in this case, for those of you who are looking to buy large portions of crypto, that you be wary in this case of exchange order books. Buying on spot markets in this case can sometimes be an issue if you're a larger investor, because the slippage in this case that you're going to incur market ordering on the order book can sometimes lead you to paying a pretty high premium. So if you are a large trader, I really recommend you guys check out the link down below in the description for our sponsor and partner, Caleb and Brown. They're an OTC desk in the cryptocurrency space. We've been working with them as far back as 2018 here on the channel. We've done some great interviews with Jackson and Jeff, some of the guys from the team, as well as Prosh. They're a whole great group of guys based out of Australia. And they're servicing all different regions of the world, as well as offering their opening up their new UK office. So if you guys are interested and you want like a real personal experience, you can talk to someone, see what offers are available out there, buy the sum of positions that you want to buy, you can always check out that link down below in the description. But again, OTC, for those who don't know, is going to actually help you all buy and match order positions. So instead of having to go out and buy crypto on your own and incur a lot of slippage, you can actually get someone who may be agreeing to sell the exact same position or amount at the same market rate. maybe incur less fees than you would on traditional exchanges. So no pain in checking them out. Feel free to check them out in the link down below in the description. Now, another thing I want to talk about, and this is going to be kind of the final nail in the coffin here, I think, to the argument of, again, this being a bear market. I don't have the time to look over all the data science models today, guys, because I just don't want this to be an hour-long video. You guys know I can tend to ramble sometimes. But I want to go ahead and talk about two, I think, very clear data science models that showcase to us that we are not in a bear market. And one of them is obviously the stock to flow model. Now, I understand the stock to flow model is a little bit of a controversial data science model. I get it. I understand how people can have different opinions on it. But it is one of the long-term weighting data science models that actually has shown a pretty decent degree of consistency here in regards to analyzing the market and the cycles. If you look at the color code here, we're very, very similar to where we were back here between July and August of 2017. Really almost about 4 years ago, right? And along with that as well, we were in the same model variance range, right? Around here on on negative 0.4 in this case for the data rating. And again, what you see here, I think, within the model is not only a repetition of history, right? Especially here to the 2013 cycle where we had an exuberant ahead of ourselves rally. We got too eager in this case, too much credit in the system, right? The thin order book driving up prices, right? We had the long extended cool down, and a couple months later, we'll be in a position, possibly towards the end of 2021, where we do get back up to those all-time highs at 65K, where we do have the room to actually grow higher. And along with that this isn't going to happen as early as it used to in the stock to flow model. Right? This is going to happen later in this case within the cycles, where the halving events might get a bit mixed in between price action. Right? And as we've talked about as well, halving events don't immediately cause an absolute shock in this case. They start a new trend in this case of reducing the daily amount of supply that miners could potentially sell in the market. And that does immediately start to change the supply and demand dynamics, but it takes a very long time for that to materialize in price. And it usually is matched not only with this reduction of supply, but usually matched with a increase in demand. And that really depends on where we are within the cycles, right? So it's an important thing to keep in mind. The last one I wanted to take a look at is the R-HODL ratio. Take a look at this here, right? R-HODL ratio here, one of the most recent readings we've got here, September 7th. Does this look to you guys like we're in a bear market? If you look across the board at practically any data science model out there, we have yet to visit any of the overextended zones, nor did we back in May. The only one there was the pi cycle top indicator. And even with that, an important thing to denote or denominate in this case to understand is that in the pi cycle top indicator, we also had a top indicator at the mid-cycle correction of 2013, whereas just a couple months later, we went on to practically 10x in price. I have no reason to be worried about this correction, guys. And I understand very, very well in this case. There really isn't much room for debate because you can see it so apparently in the crypto space. And it's the same problem that can start to distort other markets like equities like it did in the past. And that is that there's just excessive credit out there. There's people taking too much risk. And unfortunately, what I think is only going to be the only teaching lesson that's going to prevent this from ever taking off again is by the end of this cycle, we will see an exorbitant amount of credit, and I think that's going to play a pretty big role in getting us to that $10 trillion total market cap valuation for crypto. I think at that point, when altcoin dominance is 75%, when Bitcoin in this case, has already visited 200K, our high prime target or nearby that value, I think there's going to be a liquidation event the likes of which we've never seen, and it's going to knock out a lot of people. So what I think we can best do is keep our estimations moderate, learn to take profits when it gets to that exuberant level, make sure to set our stops, and stay away from leverage and credit. So anyways, guys, I've rambled on enough, but the general thesis is I'm not making any dramatic changes to my portfolio, not worried about the state of the market right now. I'm still in love with crypto. I think it's one of the best opportunities out there in the market. And it's definitely still got my focus and attention. I think we're just getting started, guys. All right. Hope this video helped you out. If it helped you guys out or you appreciated it, consider dropping a like. It's the best thing you guys can do for the channel. Leave a comment down below on your thoughts. And if you guys like the video and you want to see more of it, consider subscribing and hitting the bell icon. Another way you guys can always support the channel is checking out the Dash report down below in the description if you like this kind of macro analysis. But until the next video, everyone, I'll see you all in the next one. Take care.